Hey guys, what's going on? Welcome to the video. So we had another volatile week in the stock market, and in this video we'll be going over what to expect next from the broad market as well as Bitcoin, then going over a couple of the large earnings moves from this past week, and going over another individual setup that looks ready to explode as well. As always, there are timestamps in the description. Let's go ahead and get into it. So starting out by taking a look at the SP 500 with the SPY chart to give us the best view of the overall direction from the market. In last week's video, we went over how the market had gotten pretty extended, though buyers continue to be in full control of the trend, and their recent breakout stays intact as long as it holds above the 672.68 to 673 breakout trigger. What played out last week was an early week rally higher that found resistance at 688.9 to 689.7 before a lot of choppy price action and a small pullback for the rest of the week. So from here, the key support levels to watch include 682, the 678.47 gap fill, 676, 683.95, and then 672.68 to 673, which the breakout stays intact as long as above. If it fails back below 672.68, that would be the trigger for a pullback, but as long as it holds above, expect the market to stay in buy the dip mode. Resistances to watch on the upside are at 684, 686, and then highs at 688.9 to 689.7, where above there sees follow through into new all-time highs. Something notable is that while the major indexes have continued to hold up well, there has been some weakness in individual stocks and sectors under the surface. That is often a signal that leads to a pullback soon, so that is something to keep in mind, though the overall trend has stayed strong and given no reason to fight the trend just yet. So now taking a look at Bitcoin, in last week's video we went over how 105,000 was must hold support in order to keep direct upside in play, and 106,000 was also a key level as that was the established higher low, and Bitcoin held right where it needed to as it held 106,000 as strong support twice more in the past week with strong reactions off of it. It had a large rally off of it where it broke above the levels at 112,000 and 113,400 to 114,000, making it near the next target at 117,000 before another pullback. So this continues to be a pretty messy consolidation range overall with the same key levels into next week. So zooming in, we can see that it's attempting to hold 109,000 as new support after its reclaim and slight pullback. If it's able to hold above it from here, it can target a move back to 113,400 to 114,000, which I would consider as the biggest pivot zone above. It has had strong reactions off of it on both sides, and it acted as the upside and downside trigger last week on the breaks. A break back above there opens upside back to the upper targets with higher odds to follow through next time around, or holding below it keeps a larger sell at risk. The bear case from here would start with a break below 105,000 to 106,000, which would be the large downside trigger, and it could then target the major $100,000 level, and if it fails below there, it could target a backtest of the trend line, which would be at about 96,500 to 97,000 into next week. So overall, not much of a change in the setup, but a large move one way or the other is likely to play out soon, as after long consolidation periods comes the directional move. Alright, so now getting into some setups on individual stocks into next week, starting out with some of the big earnings movers. Starting out with Amazon, ticker symbol AMZN, as they reported strong earnings on Thursday after market close. From a fundamental point of view, the market's issue with Amazon has been it being viewed as an AI loser, and the declining growth in AWS was a big worry. But they reported very strong numbers, with the most important being AWS growing revenue 20% year over year versus the expected 18%. In my opinion, there's a great chance for Amazon to see strong follow through to the upside from here. As we've gone over, Amazon had built out about a 1 year long inverse head and shoulders pattern with about 6 months of consolidation on the right side of the base. So this chart had a ton of built up energy in it before earnings, and it broke out above the 240 to 242.52 neckline. As long as it's able to hold above 240 to 242.52 from here, the all-time high breakout stays intact and gives it a great chance for a run higher into year end. Large funds and institutions are always interested in the highly liquid stocks with momentum and a strong story behind it, and that could be Amazon from here out of the Mag 7 due to a bunch of tailwinds coming up. The earnings call went about as good as we could have hoped, and the story is there as the narrative is shifting from Amazon being an AI loser to now accelerating growth in AWS, and they're doubling the capacity by 2027, as well as the huge cost savings that will come from layoffs in robotics. So in order for larger upside from here, it needs to hold above 240 to 242.52, and we can watch 250 to 250.5, and then 255.55 as resistances and those upside triggers above for further upside if they break. And now taking a look at Meta, ticker symbol META, which was the big loser from earnings. We're not going to go too deep into the results, but the reason for the large drop is them guiding for much higher capital expenditures for 2026. Essentially, the market is looking at that as Meta feels they're behind in the AI race and are going to buy growth through capex to catch up to the other major players. So taking a look at the chart, a gap down below the 200-day moving average, which is at 678.54, which held as new resistance. That will be what needs to reclaim in order to set up an upside reversal, where a break and hold back above it can target the bottom of the previous range at 691, then larger upside above there. On the downside, we can watch 650 to act as the key pivot, which was the low from Thursday, and on Friday it closed slightly below it. If it holds below there, the next key support levels below are at 639.25 to 641.85, 632.3, 621 to 622.5, and then 600 per share. And another stock to keep on close watch into the week ahead is XPeng, ticker symbol XPEV. So this is more of a pure technical play, as it has built out a great looking setup and looks primed for a large move soon. A lot of China names have made some large upside moves, and XPeng may join the party next. So it has built out a well-defined wedge pattern and is flagging tightly below the trend line, which lines up with about 23.9 to 24 into next week. This would be the strong breakout trigger on a break and hold above, which can then target the recent swing high at 27.1, and then above there is 30, 33.55, and 35. We can watch 22.6 and the 50-day moving average at 21.99 to act as those key supports from here to keep that direct upside to the breakout in play. So that's everything I'm watching for in the week ahead. The market is in a curious spot, as it has been pretty extended with weakness under the surface, but it's also heading into one of the strongest seasonality periods into the end of the year. So really anything could happen from here, but of course do not fight the trend until the trend is on your side. So thank you guys for watching. If for anybody interested in joining the private Discord chat, that is the first link down in the description to my personal trade alerts, nightly watch lists, and I answer any questions you guys have in there. Good luck trading the week ahead, and I'll catch you all next time, and peace out.